Hello and a very warm welcome. You're watching the Newstrack. I'm Rahul Kanwal. The economic survey presented by the Government of India lays out a bullish stance on India's economic recovery. The government has spoken through this survey, but to get an independent, impartial sense of where the economy really is at, the nature and quality of economic recovery that we're seeing, and what might happen in the year to come, especially with an eye on the big union budget, the 1st of February. I'm joined on this broadcast live at this time. I want to introduce first Udayan Mukherjee, India Today Group's global business editor, joining me from London. Udayan, welcome. Great to have you with us. And this is the first time we're anchoring together, so it's a debut of sorts, and fantastic having you live. Welcome. Joining us for this special conversation is Neelkant Mishra, Head Equity Strategist India at Credit Suisse, one of India's sharpest economic minds. Dr. Shamika Ravi joins us, Senior Fellow at the Brookings Institute, works very closely at the intersection of the economy and healthcare. We've got Pranjal Bhandari with us, Chief Economist, India at HSBC, and Saurav Majumdar joins us, Editor of Business Today. I want to go across and talk initially about the kind of economic recovery the economic survey is projecting, that India will grow in the year to come at between 8 to 8.5%. Now, this is a little less than what the IMF projected, which was at about 9.2%. So the economic survey's projections are slightly conservative, and this is what's happened over the past few years. So we had a contraction in FY21 of 7.3. FY22, the projection currently, we'll know finally, but the projection currently is for 9.2, and the economic survey projects between 8 and 8.5. Udayan, there's been a lot of talk about the nature of economic recovery. The economic survey talks about a W-shaped recovery. There's also been talk of a K-shaped recovery, with the rich getting richer, the poor getting poorer. What's your reading of the actual kind of economic recovery that we're seeing on the back of this pandemic?
Hi Rahul, I think let's not toy with another alphabet, because that would make it too confusing. I mean, you've got K, V, W, and heaven knows or what other kind of alphabets in the mix. But let's just say that all of us agree, and everyone, including the government, agrees that this has been a very uneven kind of recovery. So I think beyond a point to get obsessed by a headline GDP number is not very meaningful. But taking off from what the survey is projecting, I think the projections for the GDP are a bit on the higher side at 8 to 8.5%. I think Neelkant, who's on the show today, his team is projecting between 7.5 to 8%. And if you look at the street, even other brokerages like Morgan Stanley and Nomura are talking about 7.8%. So I think the broad consensus among independent thinkers is that GDP growth will probably be somewhere in the 7.7 to 7.9% next year. But what's more important, Rahul, is what is the kind of nominal GDP we get this year? Because last year, because of the kind of bonanza we had on taxes and many other factors, the base effect, etc., we had a nominal GDP growth of 17.5% plus, 17.6%. But I don't think this year we're going to get anywhere close to that. Even if we get a 7.88% GDP growth, we're going to end up at maybe just under 14% nominal growth. And that is very, very crucial in the government's estimates tomorrow on what kind of revenues it is expecting for next year. So I think very uneven recovery, but more than the GDP number itself, what I think all of us need to be figuring out this year is what happens in the interplay between fiscal and monetary policy for growth, supporting growth, and what happens to inflation. Because last year we spoke a lot less about inflation. My gut feeling is that, as the survey suggests, we're going to speak much more about inflation this year.
Neelkant Mishra, the survey assumes that there will be no further pandemic-related economic disruption, a normal monsoon, withdrawal of global liquidity by major banks being orderly, and that there is no major oil price increase. Your sense of the economic recovery that we're actually seeing, and what the growth numbers could look like in the year to come?
Yeah, so I think that growth can surprise on the upside, and quite meaningfully so. And a very important driver of that will be government spending. To give you a number, which is very striking but has been surprisingly ignored by most commentators as well as, unfortunately, the markets, the cash balance that governments hold, that is with the RBI, is now 5.5 lakh crores. At normal times, it should be in the 50-60,000 crore range. So there is 5 lakh crores, there is 2.5% of GDP worth of cash lying with the RBI. This is the government's being unable to spend. If you see the assumptions in the economic survey also, government spending, as per, of course, the first advanced estimates, is expected to go up in FY22, this fiscal year. In the first half, it was down 5%. So what it assumes is that there will be a 29% pickup in the second half. And clearly, because of Omicron, so far we haven't seen that. So we did see a slight pickup in October, November, but then it again slowed down. And I think that how the government can accelerate the expenditure of things it has committed to do and it has the cash for. So the narrative over the past decade has been that the government lacks fiscal space. Right now, central tax to GDP could be 12%, which is an all-time high. The fiscal deficit that the markets are anchored to is a very high level. And the government spending is actually a lot lower. This is not just the center. Actually, the state governments are much more to blame for this. But in aggregate, government final consumption expenditure is actually been a drag on GDP. And I think getting it up and running is going to be very important because we borne the cost. The bond yields have gone up because the markets are worried about higher fiscal deficits. But the government and the state and central governments are sitting on 2.5% of GDP worth of cash being unable to spend. Getting it off into the economy is going to be a very major growth catalyst. And I think if we manage it prudently, despite all the headwinds that you mentioned and the economic survey mentions, I think we can do 9 to 10% growth in FY23.
Pranjal, one of the things holding back the India growth story over the past few years has been the inability or the lack of willingness of the private sector to invest in greenfield projects. Given the fact that we're just coming out of the pandemic, hopefully, fingers crossed, Omicron numbers now coming down, and that capacity utilization is reaching levels where companies might want to invest afresh. How do you see the current investment outlook in India Inc. and the desire to try and start big ticket new projects?
Yeah, thanks. This is a very important question. Let me sort of put it in a macro backdrop. The next 2 quarters or so will be very strong growth, led by pent-up services demand, especially once the Omicron wave is behind us. So we'll almost forget that, we are sort of going through this uneven recovery. Everything will look really good. My problem is that at some point, pent-up services demand will begin to fade. It will run its course. In the same way, towards the end of last year, pent-up goods demand had begun to run its course. And then suddenly, in the second half of the year, we'll be wondering what's going to drive growth. Growth numbers could begin to slow. And then we will look for a new growth driver. If you ask around, a lot of people say that's when investment will rise and that will be the big driver of growth thereon and for many more years to come. My problem is that there have been many false starts in the past. We've been waiting for the investment cycle to rise for almost a decade now. True that, some things are looking favorable. World growth is better now. Through the pandemic, many large corporates have been able to clean up their balance sheets, so they are in a position to invest. But there are many other factors that are not looking as helpful. And the biggest problem is uncertainty. Global policy uncertainty. With so many waves coming, commodity prices rising, all kinds of shortages from chips to containers, central banks changing stance, things are so volatile. Volatile environment is somewhere where investment doesn't really flourish. So I'm a bit worried about, what will really set the stage for investment growth in the second half of the year. And I do think the budget actually can play a very important role by just being extremely predictable, stable, transparent at a time when the whole world is very volatile. I think the budget can really play an important role by just being boring. The benefits of being boring when everything around you is just so unpredictable. I think we can see that in the budget, and that will be the best budget to have. No changes in tax rates, high quality spending, gradual fiscal consolidation, continuing with social welfare spending, doing capex. All the things that outlined last year, just continuing with that without any new innovation is the best thing the budget can do to increase the investment cycle towards the next second half of the year.
You're playing a bit of a party pooper, especially for India Today and Business Today, which have very bullish budget coverage plans, and a boring budget doesn't necessarily help that. But Pranjal, of course, talking about why boring is good given the current circumstances. Dr. Ravi, you work at the intersection of the economy and healthcare. I was talking to a few of the country's top businessmen just this morning, and the sense that I picked up is there is still some hesitancy, there is still some lack of clarity about what lies beyond Omicron. Will this be where this pandemic ends? Could it continue? Do you think this hesitancy or the lack of clarity, this unknown remaining in the horizon, hold back the investment that Pranjal says is very critical to drive the growth story going forward?
So Rahul, I don't just study the economy and healthcare. Frankly, I think we have to get the focus back on the real economy. I think we get so obsessed about the governments, and I think governments also gets obsessed about balancing its own budget, that we forget that the central role of a government is to really come up with policies so as we can move towards fuller employment, so that we don't have idle resources. And currently, at least from the economic survey, and again, I'm yet to look at it in greater detail, but I think we have to be a little more serious about job creation. The trends that Pranjal is talking about and Neelkant also mentioned. See, we can talk about short-term trends, but the longer we know, for a decade now, private investments have not picked up, which means, and in the immediate short run, we have seen consumption fall overall. Our dependence on government expenditure to really pull us out is very high. And that was showcased rather clearly. Last year's strategy that Nirmala Sitharaman laid out was a rather clear one. If we're going to spend ourselves out of this slowdown and spend on quality infrastructure investments, etc. But that, the link between, and you've seen capital expenditure in the last year actually rise significantly, and that's a good thing, and it needs to be highlighted. But what is the strategy for job creation? I'm yet to, frankly, see a strategy, and I think that becomes the larger issue. You see, Omicron, despite, of course, it's not as dangerous. Now, one future variance is something we have to be prepared for, but it's very clear that there is greater certainty now as far as the pandemic is concerned. So managing uncertainty remains the government's central job, and I think they've done a fantastic job as far as vaccination rollout, as far as just managing healthcare infrastructure and readiness with testing, etc. So I think the pandemic is less of a concern to me now. To me, the larger concern is this long-term, structural, what is the long-term growth strategy that we are going to see unveiled tomorrow? And I hope it is one of, moving around the jobs and the investment cycle.
Saurav, you spend a lot of time every day talking to the leading lights of India Inc. What's your sense of the overall mood in corporate India on the issue of certainty versus uncertainty, the pandemic ending? Is it really, should we just hold on for a while? Because a lot of the job creation aspects that we've spoken about really depend on whether the private sector growth engine kicks into gear and they start firing as well, in addition to the dependence on government expenditure.
Well, Rahul, I can just, to answer your question in just a simple way, I think the Business Today index, Business Confidence Index, if you remember, was at a 10-quarter high in the quarter ended September last year. That, in the latest one, which we've just put out recently, is actually gone down significantly, which is a barometer of how corner rooms are looking at the future. Now, that will obviously impact private sector investments, and that's how corporate sector will be looking at waiting and watching before something, before committing investments into the market. Now, the point here is last year and the year before, we were talking about, the various waves of COVID and the uncertainty around that. But I tend to agree with Udayan and Dr. Ravi. I think we need to look beyond that and beyond COVID now. We've somewhere as the corporate sector figured out, or as the economy figured out, how to deal with COVID. But the question here is inflation. The question here is the global uncertainty and the whole gamut of uncertainties which are coming from abroad. That is another question which nobody has clear answers to. So I'm afraid I really can't go with this bullish, 8 to 8.5, sort of figure which the government is putting out at this point. My sense is it will be a little lower.
Okay, let's spend a moment talking about jobs and the best strategy for job creation. For India's employment to population ratio to be near the global average, nearly 600 million people need to be at work. Currently, only 400 million people are at work, which means that there are 20 crore people, 200 million people who need jobs or would like jobs but don't have jobs. Udayan, your sense of the best strategy that the government ought to be following on the issue of job creation, given the different constraints that are at play?
Rahul, some of it is not in the realm of the government or in the capacity of the government to do, because I think it has to fire on both engines. On one hand, you will need to get a restarting of this capex cycle to get meaningful employment growth in the country. Now, when that happens is a trillion-dollar question, because corporate capex typically picks up when two things are in place. One is when there is clear evidence, not expectation, but evidence of a profit cycle which has begun. And you typically need a couple of years of good profits for companies to be sort of sanguine that they need to be investing right now. We've started on a good earnings upgrade cycle, but corporate profitability has not been strong for 6 to 8 quarters on the trot already. And therefore, there is some uncertainty on whether companies should be investing. The other, of course, is when capacity utilization in the system goes up meaningfully. It has started worming its way up, but I don't think we are at the point where it is maybe pushing past 80% capacity utilization, where companies say we have to invest right now. We are not there yet, though the journey might have begun. So one part is corporate capex and corporate employment generation. The other part is what is going on with the informal economy, which is where a lot of the employment takes place. I mean, I'll just give you a number. India probably has something like 7 crore SMEs. Each of these SMEs employ 1 to 5 people. Now 7 crore into, even if you take the midpoint, 3, we are talking about 3 people per SME. We are talking about 20 crore people getting employment. Now that is the part of the economy which has really been hurting over the last 4 to 6 quarters, the MSMEs, which are small employers. And if the government wants to do something about employment, then I think that is what it should be targeting squarely, how to improve the lot of the SMEs so that employment in the informal economy goes up a lot. I don't think the government needs to do anything with the corporate sector. Corporate sector capex will come in when capacity utilization improves, and that is already happening. And the government has already done its bit with corporate tax cuts, etc. for the corporate sector. But the moment you talk informal, I think a lot needs to be done. And frankly, all these fund of funds for SMEs, etc., which the government has done, I don't think those are working. So I think this budget becomes very important from an SME perspective, an employment generation perspective, because we just cannot be talking about the formal economy, which is doing much better.
Over the past few days, we've seen what are being called, Nilkant, India's first unemployment riots. In different railway stations of Bihar, we had a situation where 1.25 crore people applied for just 35,000 posts in the railways. Now that could either be an aberration or that could be a visible manifestation of a very deep-rooted underlying problem. Your sense of how Finance Minister Sitharaman should really be addressing the job crisis?
Yeah, so there is a problem of jobs, right? And this is not today's problem. This is something that we have struggled with. What we need to also look at, and to respond to what speakers before me have said, the first thing is we have not yet fully normalized post the pandemic, right? So there are many jobs which have not yet come back. So there are about 2.5 crore jobs, which is about 5% of the workforce studied in those samples, which have not yet come back, right? And so these are jobs in construction-related materials, so tiles, bricks, cement bagging, etc. There are jobs which have been lost in construction equipment production and servicing, on auto manufacturing, which of course there are supply issues which are well discussed. On the services side, these are personal jobs, the office boys, the administrative assistant, domestic help, drivers, etc. as the economy opens up, right? So all the bus didis and the conductors and the small auto wala driving the kids to school, as the overall economy picks up, I think many of these jobs will come back, right? So that's the first thing. The second is that we are also starting to see some labor-intensive sectors where exports are starting to revive, right? So in apparel and textiles, for example, we were stuck at about $32-33 billion of annual exports for like 7-8 years. Last year, we did 38. And if you were to annualize the last 3-4 months numbers, those numbers are much bigger. The scope for growth is substantial. So companies are talking about 50% growth in CY22, the calendar year 22, over what was already a record year. So the first thing is that the trend is improving. But is there still a challenge? Absolutely. I think for the next 10 years, we need to focus on manufacturing as well as services-related jobs. I think services are a phenomenal opportunity as the world ages, as even simple things like creating educational material, doing routine health checkups. A lot of the things, a lot of the sectors are where the services are getting fragmented and now can be provided at a distance. And I think that provides a great opportunity for India. So there's a lot of work to be done, but I wouldn't be as pessimistic as what some of my earlier speakers were.
Udayan has a follow-up question for you.
Yeah, Nilkant, I just want to come in on the point that you were making earlier about the cash lying with the Reserve Bank and that automatically being some kind of fiscal space which has not been utilized by the government yet. So I want to ask you a follow-up on that, on whether you see this government's outlay versus execution becoming a sort of a persistent problem going forward. I mean, this year we might have had an Omicron issue, but do you think the government setting out, say, 5.5-6 lakh crores on capex and then not being able to execute optimally and use the entire budgeted outlays, do you see that challenge lingering in the system, inhibiting the kind of capex-related stimulus that we are talking about or expecting?
Great question, and I do worry about that. The first thing is that this is state plus center, right? So the states last year, FY21, talked about 4.7% fiscal deficit. In reality, they most likely did less than 3%, so it was more or less in line with what they did pre-COVID. This year, they are targeting 3.6. When they do their revised estimates, such as the shoddy state of their budgeting, and there are no ways to mince words on that, it may appear at 4.2, but when actual deficit comes, it will be well below 3, right? Because they're unable to spend. This has been a problem in every year. COVID has made it worse. And I think if our tax to GDP continues to be at an elevated level, and which it is this year, and hopefully it will sustain, and I think it will sustain, then the governments have to either decide to give up that space, say that, look, we don't want those fiscal deficits and we will see a speedy consolidation. That, in my view, would be undesirable because government spending shrinking will actually be a negative stimulus for the economy. On the other hand, the risk that I see is that if you see so much of cash lying around, the temptation to do wasteful things, like giving massive salary hike to government employees, which is what India did in 2008-9, and we struggled with the fiscal challenges for a decade after that. I think those kind of mistakes become possible, and I think that is also a risk. So I think the narrative over the next 3-4 years is how can we elevate the level of government spending productively and prevent the temptation from using this cash wastefully.
Dr. Ravi, one of the concerns, the budget red flags, is global crude oil prices and international inflation. We're currently seeing Brent crude at above $90 billion. We're seeing heightened tension between Russia and Ukraine. And in India, we've had increases in petrol prices held back, possibly on account of the elections, which we'll get over on the 10th of March. And a lot of people watching would wonder whether all these international trends essentially suggest that once this election cycle is over, everyone will be paying a lot more for petrol.
Well, the good thing, Rahul, is that after one set of elections, we'll have another set.
That's in November.
Yeah, well, But it's not, I doubt if the government is really going to see the kind of hike that you're alluding to. But you see, this is where I think, the global uncertainty on account of what you're seeing, particularly around Ukraine, etc., does throw in sort of a new set of, uncertainty for us. But I do want to actually stick to the job or the employment problem a little more. And I think this is where those of us who are not just studying financial markets, meaning when you look at the real economy, the problem, Rahul, is the budget gives us an opportunity every year to do something in the short run and the immediate run. But I'll tell you, jobs is a longer term. Despite Neelkant's, the trends he talked about, you see, we have one of the lowest labor force participation rate amongst emerging markets. In fact, we are lower than Bangladesh, much, much lower than other markets that we often compare ourselves to. Which is why I'm saying that, we need a strategy around it. Seeing trends in exports to then say that jobs is not a problem becomes, it's perhaps not the right way to look at it. Now, the issue with jobs is a lot of it is dependent on state policies. Because we do know that states that are showing economic growth, and this is where Karnataka, Gujarat, etc. come in, they do show lower unemployment rates across different segments of the labor market. While states that are not registering that kind of economic growth, for instance, Kerala has more than 2.5 times the national unemployment rate. So state policies are very much a part of this. But I think, every budget does give us an opportunity. And I think the economic survey in particular, I think it gives us an opportunity to think of what is our, immediate to longer term jobs strategy here. And I think, that is something I'd like to see more of. Because what you mentioned about what happened in Bihar, and we have seen this happen many times. And I think in a democracy, elections are the natural ways in which some of these problems get sorted. I'm hoping to hear more on employment. Now, those of you who've been looking at the PLFS data, right, and that's a data set we should all be studying very closely, particularly for states that are going into elections. And you are likely to see where is the jobs problem more severe. And it's not just jobs problem very broadly. It can actually be categorized into the self-employed, how much have they lost in earnings, versus the casual, what kind of unemployment rise have we seen in those? And what is the recovery? Of course, we've also had recovery. But I think we can see for UP, Punjab, states that are going, and Goa, going into elections, we can actually see very, very clear differences in what the labor market problems currently are. So I'm hoping that tomorrow's budget it also addresses this election cycle, that it addresses the jobs problem, and perhaps come up with a longer-term strategy on unemployment.
One of the things the government's laying a lot of emphasis on now is privatization. The government held back, especially after the Vajpayee years, and I want to show you how year after year, the government hasn't been able to achieve its disinvestment target. Pranjal Bhandari, if you look at actual numbers realized, and some of it wasn't like a strategic disinvestment, but just internal allocations, the government's been able to realize, for example, in FY20, only 48% of the target laid out in the budget, and in FY21, 16%. So far, about 7% of the disinvestment target has been laid out. Today, a 12,000 crore rupee disinvestment did go through, but is there now an increasing sense of confidence that the government has found its mojo on privatization on the back of Air India, that after all these years of holding back, disinvestment will indeed go through with great purpose in fifth gear?
Well, that's the hope, as in, the Air India was a big positive surprise. And the real hope is that, that continues into FY23. Because to be honest, in FY22, other than Air India, we've got no other disinvestment done. So, that's really the hope. And actually, that's very important. It's actually connected to job creation. Let me explain why. My sense is that the best way to produce long-term, medium-term jobs is by continuing to do reforms in an economy which is supply-side constrained for many years. One reform is asset monetization, disinvestment, where you sell all the old assets which the government owns and you use that money to build new assets. This also becomes a form of job creation, particularly in urban areas where you don't have a social welfare scheme, getting somebody into a construction site to help make an important asset can be a form of job. So, that's one important reform. The second reform is financial sector reforms. My sense is, improving the balance sheets and the health of India's banks can have long-term implications. Today we all talk about giving some interest rate break or some sort of little subsidy to small and medium enterprises, but that doesn't assure growth in small firms. The big problem small firms have is that they don't get access to capital markets. They go to banks to get loans. And if banks are not in a good shape, banks are risk averse, banks don't lend adequately, then small firms don't grow. So financial sector reforms, things like strengthening the insolvency and bankruptcy code that can take care of bad loans piling up in the future. I think this is another reform that we should think about. Finally, on manufacturing jobs, look, we have something called the PLI. It worked well. A lot of people will tell you it did wonders for, especially mobile handsets, and true, it did. But over time, is it losing focus? Was it meant to be an export promotion scheme, or was it meant to be an import substitution scheme? Because the truth is, we have been increasing import tariffs so much that today even the cost of our mobile phones are going up and we are losing competitiveness in the export market. So we need clear thinking there. We think about the budget as a statement of accounts, but it's also a time in the year when you can think about the reforms you really want to pursue efficiently. And I think getting the asset monetization, disinvestment, cleaning up India's bank balance sheets for good, and also doing the PLI properly can be good reforms creating jobs over the medium term.
Okay, I'm going to slip into a very quick break. I'm quite enjoying this insightful conversation. Some sharp minds giving us their thoughts on the state of the Indian economy and what to expect in the union budget. We'll return on the other side of a very quick break. Stay with us. Back in... You're watching the special conversation on the state of the Indian economy ahead of the union budget. One of the positive signals that we're seeing is exports, which are currently at $393 billion, which is a record because they've been stagnant in the $250 to $330 billion range for about a year. I want to ask Neelkant Mishra if he sees these increase in exports actually sustained, because a part of this is down to the revival in global goods trade. Indian trade could be more than 2%, as you've pointed out, of global trade. But do you see this sustain, Neelkant, in the months to come?
Yeah, so you're right that global goods trade has revived. In fact, one of the implications of the helicopter distribution of cash in the US was that demand really went up very sharply, and that created what we call a supply chain bullwhip. So inventories were cleaned out, and then suddenly everyone felt there was a sense of shortage. They pulled forward demand, and then so global trade is currently perhaps higher than it needs to be. But remember that India's share, as you also observed, is still at about 2%. So the fact that we can go from 2% to 2.3%. So if you look at that $393 billion for CY21 and look at the last 3 months was $105 billion. So if you annualize that, it becomes $420 billion. So the momentum has been picking up, and there is now evidence clearly emerging, and we have documented that in segments like electronics, where we are starting off from a zero base effectively, and we are at 16 billion in CY21. If you annualize the last 3 months, is actually $20 billion. The government's target FY26, just 4 years out, is $110 billion. In apparel, as I mentioned earlier, it has gone from 32, 33 to 38. And just remember that China is ceding share because it's running out of workers. And that opportunity is upwards of $200 billion. And with the Xinjiang cotton ban, quite a bit of the action is actually starting to come to India. In specialty chemicals, the global share that India has been going up very steadily. It is now at about 3%, and we are starting to see very strong growth. So I do think that there are some very positive signals. These numbers should hold, There are other segments like steel, like some agri-commodities where the prices may not be that sustainable. But at an aggregate level, if I was thinking 4 years out, it could add 2.5% of GDP. So just manufacturing exports, where we tap into global end demand, and a lot of this will be share gain. So we do not need global trade to keep rising at 3 to 4% like it has over the last decade. If we just keep gaining our share because we're starting from a low base, I think the opportunity for growth can be quite substantial.
Saurav, you've been looking very closely at the national monetization pipeline, the government's hope of using government assets, especially land, leasing them out or getting the private sector involved. It hasn't gone as per plan. Give our viewers a sense of the problems that the government's been facing in the bold announcements that have been made and the tardy execution that we're actually seeing.
Well, it's been a 6 lakh crore plan which has been laid out on the national monetization pipeline. But I think the basic idea which the government came out with, it's the execution challenge which is actually holding it back. Now, the economic survey mentions InvITs and stuff like that. But we need to actually see some work on the ground in terms of how it is being priced, how the assets are being priced. For longer term interest from people who are interested in investing in them. And as Dr. Ravi said also, and we discussed earlier, that these have significant job creation possibilities. So I think, it's all very well to lay down the pipeline and this 6 lakh crore, see what has happened on the disinvestment side, 1.75 lakh crore. We are here at about 9,300 odd crore as we speak. So I think, we would love to see much more action in this budget on that. It's not just the announcements of the big numbers, which has happened so far. Yes, Air India has been a big boost in terms of the signal it has sent that the government is serious about doing this. Today, Neelachal Ispat is another example, but we need to see much more. The whole mix of monetization, disinvestment, and privatization have to come together. Together, all the three of the legs have to start firing for us to make any meaningful headway on this front.
Well, then, the government's laying great emphasis on these production-linked incentives, the effort to try and wean manufacturing away from China. How, if you were to look at it in an overall sense, how effective has the government's efforts through these PLIs of trying to attract foreign investment into India, becoming a part of the global supply chain, really worked out?
I think the PLI is a good idea, Rahul, and I think it is working in certain instances. But my sense is that you don't need to, beyond the fact that you lay out the turf like PLI, you don't need to do too much for the corporate sector at this point in time. In fact, the one space which I would say needs the least bit of support from the government today is the corporate sector. You've reduced corporate income taxes to 25%. I mean, you've enabled manufacturing and many other facets through the PLI and other schemes. I don't think much needs to be done. I think the focus should be on the non-corporate side now in the budget and going forward, because that's really where the slack is for the Indian economy. So I would suggest that there are two aspects which need a lot of attention at this point in time, more than trying to incentivize manufacturing, which the corporate sector will do on its own in any case. One, I would say, is what you were discussing, all of you were discussing just a while back, is how to get more money into the kitty so that the fiscal space which the economic survey is talking about can be expanded, which is get to that 1.5–2 lakh crores of disinvestment every year. I mean, 2021 calendar was frankly a big miss, Rahul, because markets were so buoyant, yet you could not get BPCL done, yet you could not get the LIC IPO through. And this year, when there is so much volatility in the stock market, once again, globally and locally, you're going to try and push through all these divestments and these asset monetizations. These are best done on a sunny day, not on a rainy day. You've missed the sunny day. And I think what we are about to enter is rainy season when you're trying to do all these asset sales. And that might be a source of problem. But if you were to get the privatization and the asset monetization calendar going, then you would create a lot of fiscal space for yourself, which might be required for growth. And I will say one more thing, and this is important. You guys were talking about inflation earlier. I think this is one thing to keep an eye on this year. The fact that in previous years, we could talk more about fiscal space, government action, etc., because the monetary policy space was actually quite passive. The RBI was basically content to sit back and watch what everybody else, all the other actors were doing. But this is the year where inflation has raised its ugly head globally and locally, and monetary policy watchers or monetary policy actors will not be bystanders. So this is the year when RBI comes back into play, like the US Fed has, and that needs to be taken into the mix while we're talking about the budget, because this year is not going to be about fiscal policy alone. You need to give the RBI an exit from its loose monetary policy. Interest rates will go up, and that will have ramifications which are as equally important or as important at what might happen in the budget tomorrow.
Pranjal, but not just in India, even in the United States, the Federal Reserve has indicated that post-March, they will start pulling back on some of the measures which were rolled out on account of the pandemic. How do you see that impact, not just the stock markets, but the real economy, in terms of how that might impact India's growth prospects going forward?
Yeah, look, there are two things. One is India's own inflation, and I completely agree with Udayan that it's something we have to act upon and we have to keep a really watchful eye on. We have seen a lot of firm level inequality rising through the pandemic. A lot of small firms have been seeing high commodity prices. They are not being able to pass it on to the consumer. Once they start doing that, then core inflation could rise. On the other end of the spectrum, we have large firms who have become, larger through the pandemic, and they might be downward sticky. When commodity prices begin to fall, they may not cut prices as much. So from both ends, my sense is that there are upside risks on inflation, which we cannot ignore. And by the way, this is not just India. This is something that is going around the world. And when you mentioned Fed, this is exactly what even Fed is thinking about, that how do you control inflation and not let inflation expectations become runaway. So my sense is that, look, we should not just hike because the Fed is hiking, and that's something the RBI has actually made it very clear. We'll follow our own domestic path, but our own domestic path is also suggesting that we need to tighten monetary policy. We've seen inflation higher for longer. It became a global phenomenon in 2021, but our core inflation was elevated right through 2020. There has been a lot of inflationary pressures in the system. Inflation expectations are rising. And I think RBI should not fall behind on this. They've done very well through the pandemic, but it's time for them to start gradually hiking rates. And if you don't do that, then, your question, what's the impact of Fed on India? Then at some point, if investors becomes, sort of selective across countries, which country has a macro house which is in order, then India may have to pay a price. Look, I'm not saying that will be the case, but it will be a good idea for the RBI to remain ahead of the curve.
Dr. Ravi, as we hopefully come towards the end of the pandemic, when you were to look back at the fiscal and monetary responses of different central governments the world over, where would India's response stand in terms of policy smarts in a global context?
Frankly, I think the word that captures the way we have performed, particularly fiscally, would be pragmatism. I'm glad we didn't follow the herd despite tremendous pressure of unleashing huge cash distribution in the form of UBI, etc. Simply because we have seen that when there is so much uncertainty in the market, then cash distribution of the kind that was being pushed really leads to heightened precautionary savings. When there's great uncertainty, people don't spend, they just hold on to the cash. So I think in that sense, they were pragmatic in really focusing on short-term humanitarian needs. So, just ramping up NREGS food grain distribution, just better targeting cash distribution to certain specific segments. I think we were pragmatic, Rahul. But I do want to make one point which we often miss, because you see the budget, every central scheme, because the budget is essentially fiscal policy and the strategy going forward for the year. Every large central scheme has an allocated X percentage, which is usually 5, to really look at what the impact of the scheme has been. Now we are well into 8th year of the government. This is something we've been trying to push for quite some time as far as large schemes, some of our largest fiscal schemes, like the midday meal, the ICDS scheme, the National Health Mission, These have been running now for a decade and a half, 2 decades. It's about time we did a serious evaluation of how they're performing so that we can restructure some of them. Some of them are outdated. So I think the entire budget again is that opportunity to look at what the past spent has been in terms of its effectiveness. Then a small point on Saurabh's comment on getting the right price when you privatize, that now we're likely to sell in rainy days, etc. So I think it's very important to look at the counterfactual. The right price also has to take into account reduced long-term short losses that we are likely to continue making if we hold on to these some of these PSUs. So from that perspective, I think the kind of signaling that Air India has given, we really have to underscore that and say what a great job done. It is extremely difficult to privatize or sell some of these assets, as we are seeing in the case of some of the best decisions under the Vajpayee government. They are still, the entanglement as far as the judiciary is concerned, it's still on.
No, Dr. Ravi, in fact, if I may just interject here, I was talking about the right price from the buyer's perspective, from the investor's perspective, which is exactly what you're saying. And we need to also weigh it against the losses of how much longer we can bear that burden of that, underperforming asset.
Okay, so we've had a fascinating conversation. I have a Air India ticket booked this week, though. We're going for some election coverage once the budget is done to Goa. Looking forward to seeing the difference the Tatas are making, but that's just early days yet. You need to give them some time to settle into the cockpit. But Udin and I will be back early in the morning. Udin, what time do you start? 3:30 a.m. London time? That's a bit early, so you need to get to sleep and then wake up early for the budget coverage.
This is cruel of you, Rahul, to rub it in, the fact that I have to wake up at 3:30 in a cold January London morning, or if you can call it morning. But yes, I will be up at 3:30, and let's see what the budget does. I mean, you guys have spoken so much about it, but I think that all the people that we will speak to tomorrow will be clamoring for a lot of things, and they will be from the corporate sector mostly. But I think the finance minister should not focus on the formal economy this time around. She needs to focus on the informal economy tomorrow, because that is what is hurting. And it's also interesting that 5 of us spoke for an hour and the word education and health did not feature in the discussion. And this is my big grouse with these budgets, that they focus on what we consider hard infrastructure, but we never talk about the things which lie at the core of our jobs problem, which is education. And we saw what our health problems are like during the COVID time. I think these are the things government should be spending on, education and health, but they never feature in our budget discussions because they get such short shrift from the government, and that's a pity.
So we'll focus on a lot of the social sector schemes as well tomorrow, and on these key sectors in terms of the allocations that the government does make. And the point that Dr. Ravi makes, don't just look at how much money was allocated, look also at how efficiently that's being allocated, and whether at all, because the typical government action is to keep increasing allocations because that's what the populace demand is. But actually look very carefully at whether the money is being effectively used and channelize it where it's required the most, healthcare and education being critical at this juncture. Neelkant Mishra, Pranjal Bhandari, Dr. Shamika Ravi. Dr. Ravi will be back as well early in the morning. So we're looking forward to having you as part of our budget panel tomorrow, and so will Saurav Majumdar. So I look forward to having all of you back. We start 7 a.m. This is India Today and Business Today's coverage of the booster short budget. So do tune in. You'll have Rajdeep, Udayan from London. We'll have Saurav, Siddharth Zarabi. So we'll have big plans. International perspective, domestic insights, lots of very, very sharp voices in our coverage all through the day. Rajdeep Sardesai comes up next with News Today. Stay with us.